Hello everyone, this is Tomo for the Market Zone, and thank you for watching this new weekly markets analysis video. We are on the third week of August. Volume starts to become extremely thin, and that is why I decided to dedicate this week's weekly markets analysis to get some perspective over the markets and take a broader look of what the global markets are showing us, with focus on two European indices that are about to reach very interesting weekly resistance zones. Before I start with the analysis, I would like to thank you all again for the support you are providing by watching these videos and sharing them. Of course, I got great feedback from you via emails and great boost of motivation by you following my blog marketzone.tumblr.com and subscribing to this channel, of course, and following and connecting with me on social media. Thank you very much for it. I appreciate it. If you aren't subscribed already, don't forget to subscribe by the end of this video. You can subscribe at any time by pressing the little Market Zone watermark at the bottom right of the screen, the bottom right of this video. And without further ado, let's start with this week's analysis. This video will be actually a follow-up on a blog post I posted last Friday on my blog marketzone.tumblr.com, a blog post that referred you to two charts that you must pay attention to: the UK 100, the FTSE, and the German DAX. Both of them reached weekly resistance zone, interesting potential sell zones following the post-Brexit rally. And in this video I will share with you the interesting price zones and what you need to monitor over the next few trading weeks. So let's jump to the chart. The first chart I want to cover in this video is the German DAX. If you recall, the German DAX declined about between 8 and 9% the day following the Brexit vote. This is the sharp decline that you see right here that drove the DAX below the 10,000 level and all the way down to the bottom of this triangle pattern. If you've been following me on TradingView, you are familiar with this triangle pattern, and when the DAX double bottomed here, I mentioned that it is a potential aggressive C entry for the completion of this bearish Gartley, and as you can see, this bullish scenario worked out very nicely, and the German DAX rallied first to meet the 200 days moving average and then confirmed that 10,000 became support by bouncing from it and completing the weekly Gartley that you see right now, which represents the current weekly resistance zone that I'm talking in this video. There were two bullish signals that indicated for me that the price is actually heading towards the completion of the bearish Gartley. The first indication, the first sign was when the price broke above this downtrend line, broke out of this triangle pattern and made it some sort of continuation pattern to the uptrend line that we currently have on the German DAX. When the price broke above the downtrend line, it continued higher, struggled with the 200 days moving average, and that was the second signal. When the price broke above it and confirmed it as support, resistance turns to support, and as you can see, we have accelerated momentum that drove the German DAX all the way up here to the PRZ zone between 10,800 more or less and 11,000, and that's the zone that I will be focused on over the next few trading weeks. Besides the PRZ, the potential reversal zone of the Gartley that we have between 10,800 and 11,000, we also have an interesting structure zone to pay attention to right at this zone, this price zone more or less. As you can see here, we have some sort of support zone the price bounced from, and then it turns to resistance right here and here and here. So the price reacts to this structure zone, as you can see, and if I pull it all the way up here, all the way right, you can see that it turns to structure resistance right inside the PRZ of the bearish Gartley. So we have also a structure zone to pay attention to. And we also have an interesting Fibonacci level right here. If I pull the Fibonacci tool from all the way up here to the bottom, we can see, excuse me, So we have the Fibonacci tool from the top to the bottom. We have the 618 retracement level, the 618% right inside the PRZ. And these three technical elements, the structure, the PRZ of the Gartley, and the Fibonacci, turns 1100 to a very interesting weekly resistance zone to pay attention to, and that is why I'm focused on finding some weakness signs inside this PRZ. Very strong weekly resistance zone in the DAX. Pay attention to over the next few trading weeks. On to an even more interesting chart. This is the FTSE chart, the UK 100 weekly chart, and it is impressive to see how the FTSE recovered from the Brexit vote, thanks to, of course, the Bank of England and the rest of the central banks that promised to do whatever necessary to overcome the Brexit vote. As you can see, the price rallied all the way up here, never even looked back when it touched the 200 weeks moving average. Rallied and closed above it, then testing it from above, confirming that it became support, and moving on forward to challenge the previous top now. And what we have in the FTSE is this weekly trend line. If I'll draw it for you, this trend line was a major support throughout 2013, 2014. It is actually the bottom of a trading channel, if you wish. And now the price will test it from below. So what was reliable support should be a reliable resistance zone, a resistance line to pay attention to right near 7,000. And we also have the completion of a bearish weekly bat pattern. I'll draw it again. The completion 88.6% more or less is right here. So we are technically in the PRZ more or less, but considering that we are close to 7,000 and the weekly trend line, I consider the whole zone here as a potential reversal zone. The X point is right here, so we have a wide distance to cover till the bearish bet will be violated. But definitely pay attention to this 100 points between 7,000 and 7,100 in the FTSE. A very interesting weekly resistance zone following the massive rally that we've seen post Brexit. That's it. That's what I have to share with you. We need to wait. The market is very strong right now. We need to wait for some sort of weakness signs, maybe a daily reversal pattern, sorry, maybe a weekly. We don't have to rush into anything. We don't have to short such a rally unless you want to be very aggressive and build your positions, build your position from as the price enters the PRZ. It depends on your trading style, of course, but for confirmation, I suggest to wait for at least some daily reversal pattern, such as maybe bearish engulfing, bearish pin bar, outside bar, pin bar, or inside bar. Just whatever you're using, price action, classical candlesticks pattern. Just wait for some sort of confirmation, or accept the fact that you are going against a major rally, assuming that this weekly resistance zone will be the end of the current rally for the FTSE and for the DAX, as we've seen in the previous chart. That's it for this week's weekly market analysis video. Thank you again for watching. If you like this content and if you like this analysis, please share it and subscribe. Don't forget to subscribe. See you in the next video. Bye.